This conference will now be recorded.
Thank you so much for organizing this event, Emily. I think that it's going to be incredibly helpful and educational for everybody on the call, as well as anybody who kind of tunes in after this. For those of you that don't know my face or my voice, my name is Kate Samler, and I am the Corporate Director of Marketing for Vantage Point Retirement Living. So Vantage Point Retirement Living is the company that's behind the development of Meadowcrest at Middletown and Arcadia at Limerick Point, which are the communities that you may be considering. And so I'm kind of taking one for the team today, so to speak, and giving Kim, Roseanne, and Quinna the day off from managing kind of the event process. So I'm super excited to be helping Emily and hosting this event. If anybody has questions for Vantage Point, Meadowcrest, or Arcadia, in addition to the veterans benefits stuff at the end, I'm sure Emily can kind of unmute us so that we can chime in and get you what you need. But ultimately, the purpose of us being here is to really learn about the ins and outs of the Veterans Aid and Attendance benefit. I think it's something that is a great benefit that can really help to supplement the cost of senior living, specifically assisted living and memory care, as well as help supplement some of the costs for home care as well. In our communities. So our goal with this in terms of what we hope to get out of the event is learning more about the VA benefit, generally speaking, how it works, how and if you would qualify. Emily will put you in touch with some valuable resources towards the end of the presentation that you can tap into that are within her organization. And then we'll also talk about, or within Emily's presentation, it will cover how it could help you move to a Vantage Point community. So with that being said, I'll kick back to Emily and she'll kind of take over what you're really here for today.
Okay, thanks so much. Okay, I am going to turn my camera off too, so I'm not distracted by looking at myself. So hold on one quickie sec. All right, so welcome everybody. Thank you for the warm introduction. My name is Emily Schwartz. I am president of Veterans Financial. Our goal and our theme is working together to make care affordable. We want to show you how between Veterans Financial, the VA, and Vantage Point, care can be affordable, and the VA has a lot of money to make it so. The phone number you see on the screen is the best way to reach out to us after the webinar. We have a team available to talk with you about your specific situation and get you what you need to get started. So, why did you join today? You joined to learn about the money that the VA is offering to veterans and surviving spouses. So this year in 2020, the VA maximum benefits are as follows. A surviving spouse is eligible for $1,228 a month. That is typically the single woman. Then there is a single veteran amount, usually the single male, and that's $1,911 a month. And then there are two married veteran amounts. I'm going to start with a higher dollar amount at the bottom of the box because that's the one that happens most often. That is when there is a married veteran and he needs care. He's moving into the community. Now, his wife can be moving in with him or not. She could be healthy or not. As long as the veteran is married and he needs care, he gets $355 more than the single veteran. Then there's a married veteran rate that often people who are even familiar with this benefit overlook. This is where the married veteran is healthy, but the spouse needs care. The spouse is moving into the community, and therefore the veteran can claim her care needs and care costs and receive up to $1,500 a month from the VA to pay for them. Now, as you've seen on the screen, all of these dollars are paid tax-free, which means essentially the surviving spouse is getting $14,700 all the way up to the married veteran who's getting $27,192. It is a lot of money every year to pay for care. All of these dollars are paid directly to the applicant. So that's the veteran while he's living and the spouse once he's deceased. That money goes into whatever checking account you put on your application, and you commingle it with your other incomes to pay your monthly invoice. So how do you get these big dollar amounts? Well, you've got to meet 4 criteria all at the same time. They are military service of the veteran, health of the applicant, net income after medical expenses, and family net worth. That's what we're going to cover today. We're going to go through all of the criteria. Before we dive in on that, I like to just explain who Veterans Financial is and why we have the credibility to share this information with you. So we have been helping families with the aid and attendance pension benefits since 2003. That is 17 years of this one VA benefit. In that time, we have educated over 170,000 families, and that's just what's in our database. Obviously, there's plenty of other people that have come to a workshop in person when we could do them and have sat on webinars all year long that learned about this information and maybe didn't give us a call and get in our database. We certainly hope all of you do, but we know not everybody takes immediate action. We also partner with over 5,000 elder care professionals like Quinna, like Kate, and the other Kate, and Roseanne, all over the country. And we try to educate them about changes with the VA benefits, such as benefit amounts going up, which is going to happen at December 1, as well as offerings like these webinars. So if you're a professional, we'd love to get you in our database as well. We provide education about the aid and attendance benefit, as well as pre-Medicaid and long-term care planning. It's important to look at the entire horizon, not just today. You want to know how you're going to be paying for your care in the long term. We do not charge for a benefits eligibility explanation or up-to-date VA forms. That means if you give us a call, we're going to go through your criteria with you, figure out if you're eligible today or in the future, and we will email you a packet, 30 plus pages, unfortunately, 31 for the spouse and 32 for the veteran, to download and complete by hand. They will be the most up-to-date forms, and what that means is the VA does change their forms sporadically, so we always want to make sure you have the most current forms so the VA doesn't send you the new forms to fill out again. We're not affiliated with the VA or any government agency. We are a private financial services company, and we make that very clear on all of our marketing materials, all of our webinars, and our phone calls. We assist families with planning if their assets are too high. And so the next question you ask always is, how are we paid? And so if we help a family with planning because their net worth, the 4th criteria, is above the net worth limit, we would earn a commission from whatever company or companies we recommend for that family situation. And it's not a cookie cutter mold. We do need to look at your care costs, your number of children, how much you have in savings, where it is, and we come up with a plan to get you on the benefit in the shortest amount of time possible. We also do final expense planning. So if anybody's on the call and they haven't taken care of their funeral costs yet, this is a good time to do it. Not only will it protect that money from the VA, but it will protect it from Medicaid. And frankly, it will keep you from burdening your children with that $10,000 or $20,000 of expense that they weren't expecting. So let's dive into the meat and potatoes of the presentation today. The first criteria of the benefit is military service of the veteran. This is the most important one. It never changes. So either a person meets it or they don't. In order for a veteran to be eligible, he needs to have served, or she needs to have served, at least 90 days of active duty. These days do not need to be consecutive. They do not have to be in a row. And I will explain to you on the next slide who might qualify without them being consecutive. Of the 90 active duty days, one of them must be during a period of war. 89 can be during peacetime, and that has happened. We have talked to people who have served in the very last day of the Korean War. It's happened actually a couple times. That's when their date of entry was. You do not have to be in combat, so you do not have to be abroad. You could actually have been stateside or anywhere in the entire globe, as long as you have 1 day of active duty during World War II, Korea, or Vietnam. These are the exact dates on the screen. If you don't want to write them down, you can certainly just give us a call and we will go over that with you. In fact, we're willing to look at discharge papers, also known as a DD-214. If you can't read them, we have folks that can help you with that. So you can email or fax that over. We're happy to check it out and make sure that you or a loved one is a wartime veteran. We also want to see on those discharge papers an honorable medical or general discharge. That's usually not a problem, but a dishonorable discharge would disqualify somebody from the benefit. So, what branches of service? Army, Navy, Air Force, Marines, Coast Guard. That's typically what comes to mind. But there are other folks that are eligible. And this is where that non consecutive 90 days might come into play. So the reservists and the National Guard and the Merchant Marines do get called up to active duty. Sometimes it has nothing to do with the war effort. It might have to do with a hurricane, a riot, something political. So, for example, this is going to date the recording, but today in Philadelphia, where I live, there are riots, and I heard that the National Guard is actually being called up. Well, those folks are now having an active duty day during a period of war because the Gulf War is still going on. So it is possible to have a reservist, someone from the National Guard or the Merchant Marines, who has multiple discharge papers with different dates of entry and exit. As long as they add up to 90 total, with one during wartime, they too are eligible. So we don't want to overlook them. And then there are women veterans. Sometimes women veterans didn't serve as long as their male counterparts, especially in World War II, and they think they're not eligible for this as a veteran, but they are. Again, only 90 active duty days. If they apply as a surviving spouse, they are getting $700 less than as a veteran. So we want to make sure they apply on the veteran application, not the spouse. So then we move into the second criteria. Now, this is a criteria that can change. We all know as people age, they need more care. And so, what the VA is looking for to meet this second criteria is that the veteran or the spouse or both has a physical or cognitive impairment. So, a cognitive impairment is obviously pretty simple. That's either dementia or Alzheimer's. We see other diagnoses like macular degeneration and Parkinson's, post stroke on the medical form as well. But a physical impairment is a little bit simpler. That is when a veteran or spouse needs care with two activities of daily living. Typically, the first two that people use are bathing and dressing. What that means is just getting a shower assist once or twice a week from the community. But you might need other things like toileting, eating, which is really feeding, it's not meal preparation, transferring, and ambulating. Transferring means getting from your chair to the bed, maybe the chair to the toilet, any movement that you need some assistance with. So, what you want to do is show the VA that you need assistance with two activities of daily living on a 3-page medical form or have a specific diagnosis. This form will be completed by the community doctor, a primary care physician, or even a nurse practitioner can fill out this 3-page VA medical form. We provide a secondary form, which also makes it even clearer to the VA why the veteran or the spouse needs your care from the community. So I know we have some residents that would be looking at independent living. You probably don't meet this criteria yet. Just so you know, when you do meet this criteria, then you would start possibly being eligible for this benefit. Okay, then we move on to the third criteria. The third criteria is monthly income versus monthly care expenses. And this is where the VA determines, does someone get the full benefit, a partial benefit, or no benefit? What they do is they look at total household income. And so that's both parts of the couple, not just the unhealthy person. The healthy person's income also counts. And then they look at medical expenses. So that's obviously the person that's moving into the community. But the other part of the couple has some medical expenses, and I'll show you what they are, and they can be added in to the equation. The VA looks at total income, subtracts total medical expenses, and comes up with something known as net income for VA purposes. You never need to know that term again, but that is essentially what happens. So first we're going to look at a full benefit. So a full benefit happens when the total income is lower than the total care expenses. So for example, if someone's total income was $4,800 a month, but their assisted living care expenses are $5,000 a month, then the VA is going to say this family's net income is 0. They are spending more than they have coming in. In that situation, they are entitled to one of those 4 full benefit amounts, the 1228, the 1911, the 1500, or the 2266. Obviously, that helps make up the difference and cover any other costs that are associated with daily living. Now, if your income is higher or your care costs are lower, you can get a partial benefit. And here's an example of that. So let's say someone's total income is $5,800, but their care expenses remain the same at $5,000. Well, then the VA says their net income is $800. They have an extra $800 every month. Now, we all know that's probably not realistic because they do have other medical expenses. They have other life expenses like cable, maybe Netflix subscription. I can't get that word out of my mouth. Haircuts. They want to give birthday presents to their grandchildren. They want to go out to dinner when that's possible. There are other expenses. Maybe they have some debt. That doesn't matter. The VA says they have $800 extra dollars. And unfortunately, what they do is they take that $800 away from the benefit. So if this was a married veteran that could potentially get 2266, the VA is only going to award them approximately 1466. My personal opinion is you don't want to leave money on the table with the VA. If there's anything else that you can do to enhance your life, your loved one's life, your resident's life, you might as well do it. You're leaving $800 every month with the VA. So that might mean looking at a 1-bedroom instead of a studio, or a 2-bedroom instead of a 1-bedroom, allowing the community to help you with your medication rather than your daughter, or getting a shower assist 3 or 4 times a week instead of once or twice a week. You might as well. You will then get more of the benefit all the way up to the maximum. So consider what else might enhance your life. So let's look at what counts as income. So Social Securities, again, both parts of the couple, pensions, if someone's fortunate to have them, wages, if one part of the couple is still working, even a part-time job, that will count as income. Rental income, if you're renting out any properties, interest and dividends. So any money coming in that can pay Vantage Point every month is considered income. Now, what is a care expense? Care expense is senior living. Obviously, that's why we're on the call today. Primarily assisted living and memory care, because you want to show the VA that you are getting assistance for the dollars that you're spending. Home care. I know home care sometimes comes into an independent living room or residence. That home care is a medical expense, even though the independent living is just viewed as rent. Any home care that you bring in, the cost of it can potentially get you a partial benefit, sometimes a full benefit, but usually a partial benefit. Adult daycare, nursing home care if you're paying out of pocket. So that's not if Medicare or health insurance or Medicaid is picking up the tab, only if you're paying out of your own pocket. Health insurance premiums. Now, I mentioned before that even the healthy person has care expenses. This is where that comes into play. So that's Medicare usually, which is about $150. And then sometimes people have supplemental policies, which can be $200, $300 a month. That's a lot of money for the healthy person that can be added into the equation to get the biggest benefit possible. And then we have reoccurring prescriptions. That's medications that people take 365 days a year. So again, that is for the healthy and the non-healthy person. They have to pay, and usually that's $50 or $100 a month. That could get added into the equation. Now, if your assisted living or memory care is greater than your income, you really don't need to worry about any of these other bullets. Typically, people put on the application their health insurance because it's easy. It's coming right out of their Social Security. But I wouldn't worry about the prescriptions and documenting your prescription receipts if the top 5 get you the full benefit. So again, to reiterate, if you need care with activities of daily living or require a protected environment and the community is providing that, then it will be a medical expense. So we are on the home stretch. The last criteria is the asset limit, and this goes up every year as well. So the benefit amounts are going up 1.3% starting December 1, as is the asset limit. It's not going to make a huge difference, but the numbers are going to change. So this year, the asset limit is $129,094. If your family is above this number, it is still possible to become eligible for the benefit. But what you don't want to do is send in an application with more than this. You will just get denied, and then you have no recourse other than spending down and reapplying once you have dipped below that year's asset limit. So what is an asset? An asset is anything you can use to pay Vantage Point as well, just like your income. So it's bank accounts, CDs, annuities, IRAs, 401ks, mutual funds, real estate other than your primary residence, stocks and bonds. Anything that you can sell, the VA will count. So what do they not count? Well, they don't count your primary residence, which I guess you could sell, but if you are not planning on selling it, you cannot pay Vantage Point with a window or door. And so that will not count. It can sit there, you can rent it, it doesn't matter. As long as you don't sell it, you can be eligible for this benefit. What happens is most people do sell it as they're moving into senior living, and then it goes into their bank account in the top section and can cause them a problem. So your home can have up to 2 acres around it. Anything greater than that is considered real estate. And the value of acre 3, 5, 10, 20, 100, whatever the value of them are, could potentially cause you to be above the asset limit. You have to document the value of that acreage. Life insurance. So usually people at this stage of the game have life insurance for their funeral. It's a small policy. It's what we sell. And if you don't have that, as I recommend, you really should get one. The VA will not count that against you, whether you're buying it now or you already had it taken care of. And they don't ask about vehicles or personal property. People always want to ask me about dad's truck. They really don't care about dad's truck that's valued at $3,000. So if you do have a home that you are going to sell, it is possible to protect the home and the future home proceeds. I'm going to talk about that in 2 slides, so we're going to circle back on that. If you are above the asset limit, you're probably wondering, is there a look-back period? Everybody knows there's a 5-year look-back with Medicaid. Well, there is a 3-year look-back with this VA benefit. It was instituted 2 years ago, unfortunately. And based on any gifts made, based on the date of them and the size of them, the VA can assess you a penalty period, a penalty before you are allowed to get on the benefit. So if you mistakenly apply with more than the asset limit, which is $129,094 in 2020, or improperly gifted and applied at the wrong time, you can actually be penalized for up to 5 years, 60 months. So any families that work with us and do appropriate financial planning will apply in month 37 and be eligible for the benefit. A lot of times we're actually able to bring that number down using some strategies to 0 to 12 to 24 months. And so it's worth investigating, if you're over the asset limit, what your options might be to get the benefit without just spending down. We don't want people giving up and not applying for this benefit ever. So I mentioned home sales. Here's a scenario. Susie moves into an assisted living. She has $30,000 and a home valued at $200,000. So she is eligible for this benefit from everything I told you. Well, she applies, she gets awarded, but 6 months down the road, her children decide to sell the home. When they sell the home, she now has $230,000 in her bank account, and she is no longer eligible. She's over by $100,000. If the VA learns of this home sale, which they likely will because they do communicate with the IRS and there are tax documents when a home is sold, she will probably be taken off the benefit and must spend down until she dips below the net worth limit. That is not what we want to see happen to any family. That obviously throws a huge wrench in your income. What we want to do is work with a family before they sell their home, even before they apply, if possible. And we will connect them with a VA accredited attorney who can help them through the process of protecting the home and the future home proceeds, so the money can be used if necessary to pay for care, but will not prevent them from getting the benefit. I'm going to do 2 slides of frequently asked questions, then send it back over to Kate, and then when I will to open the lines for any other questions that you might have. So the aid in attendance approval process takes an average of about 4 months. Depends on how good of an application you submit. So I'm going to give you 2 options to do this process. Doing it by pen and paper usually will get you that 4 months. Doing it on the computer can decrease that amount to as little as 35 to 45 days. Benefits are paid retroactive, so that is the good side of any waiting period that you might have. If you apply by the last business day of any month, so we are right at the end of October, if somebody applied this month or even gets an application, a claim opened by Friday, this Friday, October 30th, the VA will owe the veteran or the spouse starting November 1. So if it takes them 45 days, 4 months, 10 months, the VA is going to owe them whatever their benefit level is times the number of months they've been waiting. So that could be November, December, January, February, so on. The purpose of doing this application as quickly as you're eligible is that way you get the maximum retroactive money. The VA does not recognize a power of attorney signature, so I'm sure we have POAs on this line. We don't want you signing the application. That will cause the VA to send it back. So what we do need is the veteran or the spouse signing the app. Even chicken scratch handwriting is acceptable here, or an X with 2 witnesses. Even if they have a cognitive impairment, they need to be signing their own application. The VA does not pay both disability compensation and the aid in attendance benefit. So some veterans are already getting money from the VA for getting hurt in the line of duty. We need to assess which benefit is greater. If they are at 80, 90, or 100%, they are probably already getting more money from the VA than aid in attendance can provide, and therefore there's really no point in applying for this. If they are at 70% rating or below, they should apply, but they need to understand the other benefit. The disability will stop once this benefit is awarded. So we don't want people moving into a room they can't afford because they thought they were getting 2 VA incomes. If somebody does have dementia or Alzheimer's, the VA will not release the retroactive money to them. That's $5,000 or $10,000. And if someone has a cognitive impairment, the VA's assumption is they can't manage those funds. So they will appoint a fiduciary, who is usually the POA. A local member of the VA will either meet with them in person or right now virtually to appoint them trustworthy and creditworthy and make them the fiduciary who can get the release of that money. The good news is the monthly payments will start into the checking account put on the application, and therefore that makes it a lot easier to pay your monthly rent. If an applicant's care is being paid for by Medicaid, so usually they start private pay and they run out of funds and they need to go to a Medicaid room, then they need to let the VA know because they're only entitled to $90 a month. They're no longer paying out of their own pocket and therefore not eligible for the full benefit amount. And lastly, and sadly, if a spouse is divorced from a veteran or remarries a non-wartime veteran, so even if they remarry a veteran but they didn't serve during wartime, they are not eligible for this benefit any longer. The spouse applies on the last marriage. Marriage 2, marriage 3, marriage 4, whatever it is, they have to apply on the last marriage. And whether that veteran is eligible or not makes all the difference. So 2 ways to get started with this benefit. As I mentioned, you can give us a call, 800-835-1541. I have people available to answer your call right now. As soon as we hang up, you can go over your criteria and they can email you a packet to start filling out by hand. Or you can go to a website, aidandattendance.com. This website is like TurboTax. It does 2 things for you. From the homepage for free, you can go through your criteria just like you would do over the phone with someone, but you can do it in about 5 minutes all by yourself, and you can figure out whether you or a loved one is eligible. If you are eligible, you can start your application online. There is an application software. There is a charge of $99 to use the software, but you can get that 30-page application done in about an hour. It's like TurboTax. It asks you questions and it knows where to auto-populate all of your data and all of your answers onto the 31 or 32-page application. Now, you still do have to print it because you need the veteran or spouse's signature, the doctor's signature, and the community's signature. But these applications are perfect. It will not let you print if you've made any errors or left anything incomplete. And that's why they go through faster than the handwritten ones, because the people at the VA can actually read what you're writing and they know that you're eligible. So I appreciate you joining me today. I'm going to turn it back over to Kate just to wrap it up. There
Okay.
you go.
Thank you so much, Emily. I feel like every time I listen in or talk to you about the benefit, something is either reinforced for me or I catch another kind of insight that I hadn't really thought of before. The VA benefit, I think I've been in senior living for 12 years now, and it's something that is still, with all of the families that I've talked to, can be such an overwhelming process to kind of tackle alone, which is why I think it's great that we have a resource like Veterans Financial and aidandattendance.com that we can kind of offer families for support. And if this is something that you're considering, I think having that outlet for you is really beneficial. So I appreciate you taking the time today.
My pleasure.
For as far as Vantage Point in our communities and how the VA benefit works within our communities, I think, Emily, you did a really great job covering the types of care requirements that the VA benefit, that makes you eligible for the VA benefit, and that is primarily in our assisted living and memory care. So when you fill out the Veterans Aid and Attendance Benefit paperwork and you submit the application, you complete that application independently or with the help of with the aid of a third party, like that aidandattendance.com/TurboTax kind of form. Once you submit that application or you print it out, there is a form on the application. It's an exhibit or an addendum that we as the community will sign off on to verify that you require that level of care, and we'll be providing that for you in the community. After we sign off on that, you submit the application, and then once you're approved, the VA will pay you directly. So we will authorize and verify that you require that certain level of care that will make you eligible. But aside from that, this is something that is really paid directly to you, and that you apply for and kind of manage with the support of a family member, if a resident is having a family member assist them in filling out the paperwork, or something like aidandattendance.com. So I just wanted to kind of offer that information in terms of how we work with the benefit and what is expected of us as a company and as a community.
That's perfect. So we are really looking forward to helping everyone. Again, please give us a call or hop on the website right now. If you have any issues with the website, there's a phone number there as well and a chat box, and people are available to help you with that too. And I'm going to turn off the recording and see if anybody has any questions.